Okay, dealing with buyer's remorse, buyer's anxiety. Are you going to buy at the top of the market? Have you bought at the top of the market? Stay tuned. Let's chat about it.
I'm the ringleader, so listen up.
Good morning, everyone. Welcome to Morning Minutes. Myself, Michael Bergio, Mark Novak. Why buy at the top of the market? It's probably been on everybody's mind for probably the last year and a half. Well, it's always on everyone's mind because you always hear about the market going up or down, top, bottom, bursting. But when we're in a rising market, everyone sort of thinks, oh, I'll wait till it drops. I'll wait till it drops. Why buy at the top? But Mark and I are going to talk a little bit about this morning about why people are buying now and what's the mindset. Even if you admit to yourself, this is the top of the market, why would you still buy? Mark, let's get through it. But how do you know it's the top? Is there I think it's the biggest question.
I don't think you ever know. Oh, I don't think you ever know.
So then why would someone buy now? Like Newport's gone up 70%. Why would someone buy a house right now?
Do you know what? It's time in the market. Timing. What's that saying again? There's a saying.
It's not timing the market. It's time in the market. So it's not about buying in March or April when the percent goes up or down. It's about being in it for a decade or 2 decades or 3 decades.
Absolutely. So, and at the end of the day, if we don't know where we are. Are we at the peak? Are we is the peak in 3 years' time? Who knows? But what we do know is that if you sell peak to peak, you're doubling your price. So it doesn't. It's sort of irrelevant where you are. And I think, like Luke said, if you can get that finance, you just go for it. Top, middle, bottom of the market, wherever you may be. That's what I reckon.
Yeah, and I think you got to look at it from 2 aspects. Let's say one, you just don't know if it is the top, so it could go down after you buy it or up. But you've got to look at, I think, a few reasons why the market keeps going up decade after decade and decade, and then that can, I think, when people always try and predict it goes down, they're trying to predict it on emotion, like the sentiment. Sentiment's a big one. When sentiment's strong, it does fluctuate the market, but sentiment is not the foundation of the market. Now, I'll list 5 things which I believe are the foundation of our strong property market, which is we've seen tremendous growth. And when they change, then they may have proper effects on the market, not swings because the media says things are bad. So access to credit has been a big one. We saw in 2018-19 when they tightened up credit that we saw a downturn in market. So that's a big one.
Big time. Yep.
Population growth is huge. Northern Beaches, DY, for instance, Mark, over the last sort of 10 years, has gone from I think 17,000 population to 26,000 population. Now, when you combine population growth with planning controls, because if you have really strong population growth, but you can build a lot of units, then it sort of counteracts itself out. But Australia, Northern Beaches, we have very strong population growth, but we also have very tight planning controls. I'll just go through the other 2, Mark, and your view.
And that's that population growth. I think that's DY. You're referring to the Northern Beaches as a whole. It's something like 240,000, but the population growth bringing immigrants in has always stabilized up our economy. I think we're doing about 300,000 to 400,000 people a year, but it's stopped the last year or 2. But certainly when that tap turns back on, off it goes again, and that stimulates the property market again.
Yeah, and then the last 2 I reckon are our pillars is our tax policies. Our tax policy, especially for investors, gives great incentive to buy property. For a lot of people who don't own a business and you want to reduce your tax, which who doesn't? Money to the government. Most people's mentality is I'll spend it better than the government. is heavily weighted towards buying property, tax write-offs, painting. So that's a huge one. And our economy and government's been pro property tax deductions. Now this last one, Mark,
and the growth in your property is not taxed. So
yes.
it's pretty much the only way in the country that you can make money and not be taxed for it. It's the only method, which is owning your own home. So that's the government again.
Do you want to go in detail to that?
Big cut off.
What do you mean?
So basically, if you own a house and you buy the house for $500,000 and you live in the house for a couple of years, that $500,000 growth that you made out in your house, because you've lived in it, does not get taxed straight into your back pocket. It's the only way in the country to make money without paying tax, and that is just such a stimulus for people and motivator for people to own their own property. It's just huge.
And that's, like you said, that's huge, because if you earn 500 grand as an income, you probably pay 48% tax. That's 250K. As a business, you're paying 27%. Like, it's $250,000 to $400,000 saving to buy a property. So when people say, I'm not buying property, I'm going to buy shares, I'm going to do this. Well, that's great, but you're going to be missing out over that decade. I can get that argument maybe for your other investments, but we've got other pressures which can counteract that with the tax deduction. So it's very pro-property. Now, the fifth one, which we sort of knew, but it only really, the penny dropped when I was thinking about this morning, is the age pension, and especially growing with the older population, because with the pension, how it works, think of your parents or your grandparents. If they own their home, could be worth $5 million, but they don't have much liquid cash, they can still get their pension for whatever it is. But if they sell the property to downsize to an apartment and they've got $1 million cash, then they lose their pension or get a lot less. So you see a lot of older people, they don't sell their home, which then creates less stock on the market. And when you think about it, Mark, if people were living to 70 from retiring at 60 to 65, passing away at 70, house comes on the market with the kids. Now I think the average age is like 75, going up to 80. Like, we're living longer. So that means that property, instead of coming on, that property is going to stay in the family for potentially 5 to 15 years longer, creating less stock for the market.
It's a big one, and for families, I think as a government that creates stability. That having it in aged care for that long, these people are going to own it for 40, 50 years. These properties, sit on it and absolutely enjoy. I don't know if it's necessarily a good thing though, Burge. I'd rather see these guys getting into. Thinking about it now, I'd rather see these guys get into a unit, cash out, and leave it for a large family. Do you know what I mean? Because
yes,
it's one, like, you imagine grandma living on this big block of land, and then you get a family of 4 living in a unit, worrying about affordability. So I know there's been some moves towards it, but they're really good things you brought up today. To get into the property market, I think it's time in the market, not timing. It's time in the market. How long have you got your money in there? And a layer upon layer upon layer, I think if you can keep chipping away and buying property, we all do in the office, and it's really it's financial. I know it sounds really gay, but financial freedom is, everyone goes, oh, look, I don't know that, but it's important. I think it's really, really important, and not only that, it pays itself off if you're doing investment properties, or if you're if you're upgrading your home. There's no tax there. It's just incredible incentives to do it in the Australian property market. It's got to be one of the best property markets in the world. We are blessed. It's underneath our nose.
Yeah, and I think the 6th point there is sentiment, and what we see fluctuate more often than not is sentiment. And the pillars, the foundation of our strong growth don't change too often with what we've listed there. So the media jump on sentiment at your local barbecue.
Well said.
You're talking about sentiment. When you see the auction rates, which are flawed, that's sentiment. It's all sentiment. So when people think, why buy at the top? It may be the top for this month, maybe at the top for this year or the next 2 years. But while we still have those 5 pillars pushing our property market up, then it won't be the top for long. So you have to live somewhere. At the moment, with rates so low, it's cheaper to buy than rent. So you've got to make your decision.
Yeah, I wish there was a way to digitally measure sentiment in the marketplace, but it's one of those things that makes you feel warm and fuzzy. But certainly, that sentiment is a powerful thing, guys and girls. Like if you can work out what drives sentiment up or down, what are the drivers, full stop, and you can apply that principle to, for instance, the property market. That's really powerful. But who would have bloody thought that the sentiment created in the last year or two would have driven prices like it has? It's just, who would have read that play? Prior to COVID, it's unbelievable.
It's crazy. But I think that's a wrap, and hopefully that helps someone, tag someone in, and yeah, we're back tomorrow morning.
Just get in there, buy. That's why. See you later.